Well, hello, folks. I'm L.A. Little, and this is your weekly NeoTA wrap. Where we take a look at these markets, and we do it from a neoclassical perspective each time, asking ourselves what happened last week and what does it tell us about the coming one. I do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel L.A. Little. If you want to subscribe, anytime content is pushed on daily shows, morning broadcast, you'll get an update and let you know it's out there. The content is there. I've been asking, what is it that's best for you? And I got a lot of feedback last week, emails, also feedback on the YouTube. And, generally it looks like, what people think and what they are saying is that, take as much time as needed. Yeah, we like it crisp, we like it short, but if you got something useful to say it. Don't cut it short just because you're trying to keep it to 15 minutes. So that's what I'm going to do. That's the way I'm going to look at this thing and the way I'm going to try to treat it going forward. So let's see what happened last week. And what we find is basically up. Right? We had a nice spurt up, primarily driven by the NASDAQ, which almost doubled for the year based on just last week alone. You had 1.5% pretty much across the board, 3% in the NASDAQ. It doubled everybody else. Up for the year, but I would point out, if you're watching this, right, the Dow, the listed issues, the S&P, definitely trailing the NASDAQ and the Russell, and of course the NDX. So up week, but nothing, nothing special. A lot of up, a lot of back, but no give up, and that continues to be the case. If we look at the NASDAQ, we probably should start with it since it broke out. The NASDAQ, has been trading inside a range. That range basically from here to there. If I draw it just a little cleaner, we had those 3 swing point lows, never got down to test them again on this little push back. And so those hold. You never get the retest regen off the bullish setup, right? So you had the breakout here. That swing point was over there. You never came back to test it. So NASDAQ almost 3 months now without a test of that lower, bullish breakout. And that's pretty strong when you do that. You get over this high, that's the break right there, and you extend. And you can't ask for anything more. It does do a doji on Friday. That's a reflection potentially of consolidation, reversal, or continuation. Dojis really don't tell you anything until the next bar. So if I look at this just purely from a ABCD perspective, it's pretty much done it, right? You've already got your completion of the A leg versus the C to D leg. So NASDAQ has already done what it's supposed to. Now I say that with the NASDAQ about to report on Apple, and many times Apple will run up into earnings and then sell off. In this particular case, the big bar is here, and if we come back and put a boundary around that guy, this is the key bar, and look at where it goes and sits. Folks, it does this over and over and over. Bars of importance in front of news tend to be magnets. Prices push right up to them and then sit there and wait, right? And the wait is one of two things. Either you get your break, and in this case you break out, you go test that high and try to break over it, or you fell. You fell at this level, right? And you're back down the other way. So Apple is going to be the big news on the earnings front. On the economics front, it's going to be the Fed. Fed gets together, says what they're going to say on Wednesday. And then the other piece of it really is going to be economics in terms of some data points that are going to give us an idea of whether the winter slowdown is like last year and we're going to get a slingshot out of that, or if it really is more than that. And that, I believe, is going to be the biggest story going forward. What is the economic story? Are we going to see a push higher in economic activity or not? And I think that's going to define what we see next. Friday, we also got a breakout on the NDX. It breaks out over the highs. And if you look at these on a weekly basis, this one also breaks a swing point high. So you got a break on multiple time frames. Typically in neoclassical, that says you're going to get an extension, 2 to 3 bars on the longest time frame, which is the weekly, which would say this is going to try to extend. That hasn't worked so well this year. I mean, it has worked, so to speak. I mean, look at the last one. Here was the breakout. There's your 2-bar extension, and that was it. Consolidation. Look at your breakout. We'd have to go back to here. You know, back here they were actually doing what they should do. This is June, July last year. Extension. You know, you get 2 bars and then you actually take off. So it's a different story than it has been. It's a much more labored market at this point, but one can't really argue with the fact that it's still a bullish market. The trends are still up. I don't like the way this market trades. I don't think you can put a lot of confidence into your trades anymore like we have been able to, but they're not extended. You know, you got a 20.4, 17.4 on the MTTFs on a short and intermediate term on this particular index. If we move over to the Russell continues to extend higher, hasn't given it up. It's got a swing point high here now. It's going to try to test that one. And if you look at the Russell also not extended. It's 54. You could go about 12, 14 more bars on the daily, so another 2 to 3 weeks before it becomes extended. So when you look across the spectrum, the only ones that are lagging really are the S&P 500 and the Dow. The S&P got over this swing point high, got over that big volume triple witching or quadruple witching bar, which was the bar that was hanging it up. And now it's going after the other high and it's going to try to attack it tomorrow and get past it, 21.19. ABCD structure here, if it gets over it, also projects a decent amount to go. They're all set up basically the same way, so it's got another 15, 20 points. We're not talking large movements. I don't expect large legs higher right now. But this market, even though it labors to go up, it refuses to come down. And so much of that, as we've talked about, is about overseas. And when we'll come back, we'll look at that aspect of it. Be right back.
At TA Today, we have many services that teach trading to our clients. You can use LA's tools to trade and/or learn how to trade alongside LA using his neoclassical methodology. To earn these free services with no subscription or charge, go to our homepage, click on either the Tools and earn free services or Trade with LA and earn free services. On this page, you can refer a friend. Fill out information about yourself and the friend you are referring, and you will earn up to 3 months of free service with no charge as long as your friend continues to be a subscriber. So remember, refer one friend and earn up to 3 months of free service with us. The more people you refer that sign up, the more months you earn. If you have any questions, let us know. Thanks from the TA Today team, bringing you tools and ideas to help you trade.
Well, the overseas markets have been and continue to be the story this year. It's not the U.S. And if we move over and we'll start with Europe, Europe's got a nice push going. 3 months now, we're on the daily. Nice big push up, a little correction, another push up, and now another correction. This is on the CACs, the French CACs. This one actually has a consolidation going up here. It's trying to get back in and do a retest regen off this prior high. That's on the daily. If we look at it on the weekly, this has been straight up. It got a nice big spike high on volume after a long run. Consolidation would be in order if it chooses to, right? Because you can get these spike bars and they may end up being the top of what ends up being a consolidation, and sometimes they don't. This actually has a large ABCD structure in place on the weekly that is just still continuing higher. And so, will this be abbreviated? We get some sort of consolidation here, or is it just going to simply extend? My take on this, which I communicated last week, is more than likely it's going to consolidate. And the reason for that is the DAX, which is really the engine of Europe. And the DAX has a consolidation going on, pushes down, gets a little bounce up, and comes back to test again. Now, the volumes aren't there on this test, but it hasn't tested. It missed it by a buck on the test. You've also got a swing point low sitting over here that so far it hasn't been able to test. So we're still waiting on the DAX to see what's it going to do. And the importance of that is the DAX really kind of has two ranges, and that other range is going to be the bottom of this bar, right? That takes it up to there. And so I wouldn't be surprised to see the DAX on the daily come back and break this swing point low and move down into maybe this area, right, and look like a total breakdown in an ABCD structure on the backside. Now, that's going to worry people if it happens, and they're going to get fearful, and this thing could come all the way back down here. And if you think about it, that actually would be just one more push. Let me get rid of that one. That would be one more push. That would be equidistant, right, between these three, and that would be the target. However, as we just looked at the CACs, that probably is going to find support on that retest regen because it's after 6 bars, and more than likely it will find support. And so I wouldn't be surprised to see this get abbreviated and actually hold this little zone down here, and then those that push into this thing and start shorting it potentially get caught in some sort of a trap. So that's the way that one sets up. If you look at it on the weekly, it certainly looks like a consolidation on a weekly. You get a big breakdown bar, volume a little bit heavier than it was last week, a long tail on the following bar. This does look to me like it is going to consolidate and consolidate in this area. So the DAX to me looks like a consolidation forming, and that's the way Europe is kind of set up. Now, if you look over at Asia, and I'm going to start with the powerhouse, which is the Shanghai index. I finally got all the data in here, and now we can track the Shanghai correctly. The Shanghai market has been screaming higher, and on the daily chart there really is no sign yet of a failure. There was a doji at the highs. Today or tonight in Shanghai, it will be the test. Can it get back up and over this and continue to extend? It's got a large ABCD structure going on. Volume expanding, that's usually the kind of stuff you see. Vertical rises right before you get consolidation. And so we certainly look like we're setting up soon for some sort of consolidation like we saw once before. Somewhere up in this area, it could extend farther. If you look at the ABCD structure, that one actually does project higher. It hasn't extended all the way yet. Projects another about 800 points, if you can believe that. But 800 points in this market has proven to be just a stepping stone. It hasn't proved to be a problem. That's the Hang Seng. I mean the Shanghai market. If we look at the Hang Seng itself, so if we go over and look at Hong Kong, Hong Kong is trying to do the consolidation right here, right now. The big volumes were here, right? These two bars. Now you're dealing with very low volume into that area. That typically leads to a failure, and a failure in this case would bring it back down into these lows and test again. Right down in here, that would be the consolidation area. So Hong Kong looks like a consolidation trying to set up on the daily. On the weekly, it goes over, back under, less volume. After an extended move, that's a 2-bar reversal. That also suggests Hong Kong is going to try to slow down. But right now, Hong Kong is totally dependent in terms of whether it goes higher or lower on Shanghai. If Shanghai goes higher, Hong Kong can't pull in, even though it wants to. And so this is kind of the case where you don't want to be long the Hong Kong market, because when Shanghai finally quits going up, Hong Kong's going to fall faster and probably farther. So I'd want to be long Shanghai, not Hong Kong, at this particular point in time. The other big market mover is Japan. If we look at Japan, it gets over, comes back in. The volume's there on the push. It's been doing ABCD structures on the way up. Japan looks nice and clean the way it's doing its movement. And so you see these movements. Japan actually wanted to go farther. Maybe it's going to set up some sort of nested ABCD structure to get it up to that level. Doesn't look like anything wrong here. And so much of what's going on in Japan, and of course what's going on in Europe, is all about the dollar. And if we look at the dollar, that particular setup looks like consolidation. And in fact, you've got an ABCD structure that just got started. There was a doji on Friday, but just got started. It's going to try to bring it down and break this low. Now that low, if we look at the price point on it, is 25.36. So if you move over now to the weekly, 25.36, and this low here is 25.15. So if we break, we get down underneath that low, what does that do? That actually sets up the first larger range in the dollar, right? That brings it back 3 equidistant levels. And that would be the test right there. It's this bar. And that bar, if we take this off now and look at it, that bar is the January 19th bar. That would be the bar. What I would expect the dollar bulls, if they're going to make a stand, it's going to be right in that area. That is going to probably set up that area. Now, given that it can come back farther and push and break on a daily, that would give the markets, especially overseas markets, the opportunity to try to move higher. That would bring, would bring those markets to a standstill. That would bring the FXE higher. That would also bring the yen higher, which would lead potentially to some sort of pullback in those markets, which seems to fit in with the consolidation story we've been talking about. Strength in these currencies actually hurts their markets because so much of their buoyantness is a result of what they're doing with their currencies. Okay, so that's, I think, a pretty good wrap for tonight. It gives you an idea of what's going on. I've got a couple of viewer questions queued up. We're going to take those tomorrow. And we'll try to work in one a day. And so if you do have questions and you want me to look at them, shoot them to me, and I'll try to schedule you in along with everybody else. All right, that's it for tonight, folks. This week looks to me like the market's probably going to be choppy, just like it has been. And I expect that we're not going to make a huge run forward, maybe a little bit more up and some more down, just like it's been all year long. Have a great one. I'll see you tomorrow. Good night, folks.